Good afternoon, everybody. How's everyone doing? Hey, hey, hey. What's up? So, I'm using a new system to stream onto YouTube that the tech guy hooked me up with. So if anybody's able to check on YouTube and make sure I'm running, I would appreciate it. I used to use something called XSplit, if anybody's a nerd and knows this stuff, and now they got me on OBS, it's called, to stream. So I'm streaming to you guys. It should be on YouTube at the same time. So if anybody can confirm that, that'd be cool. No matter what, I'll just push ahead. Um, awesome, awesome, good stuff. So cool. OBS is a great product. Awesome. Glad to see all that. It's really good stuff. Yeah, so I'm on my brand new computer, brand new gaming computer here. It seems like it's working really well. Should better be not cheap. Um, and I got all new systems and new. I don't know anything about computers. I think you guys know that. I know nothing about technology. New GPUs and EDUs and whatever technology. I think I got some NVIDIA stuff going on. All right, let's jump in before I make a fool out of myself. I know markets, I don't know computers. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, kind of late here. I got back into Apple today. I'm very small in it though. When I got out of Plug today, I got out of Roku today, I got out of KRE today. I've been out of JP Morgan for a little bit. I had gotten out of that Target. Uh, I sound different. I hope that's good. Audio is muffled. All right. When I did that test run for you guys earlier, it seemed like it worked well. I got no choice but to push on for now, and then I can protect further next time I'm here. And anyway, I still have some teacher book Q short. Still have some teacher book Q short. Today was perfect. Let's go over into the bulk of our meeting. So SPY closed up a 0.25%. Qs are flat, and the IWM is 2.7%. Massive move from the Russell. It's perfect rotation. It's really exactly what you want to see. This is exactly what you want to see if you're trying to be bullish with the market. Yeah, the big thing that bears have been pointing to from a technical perspective has been weak breadth. Well, the breadth picked up along with the IWM breaking out Friday of last week. And then today was amazing rotation, great follow through. Like this is exactly what you want to see if you're technically bullish on the market. And you can see here on the 5-minute charts I still have up. SPY is kind of a nothing burger of a day, nothing happening. Qs, nothing happening. It was all about this IWM chart. The Russell, even I was excited I was excited within 10 minutes for sure. I actually remember being excited 5 minutes into the day. The first 5-minute bar on the IWM, look at that compared to the first 5-minute bar on the SPYs. Look at that compared to the first 5-minute bar on the Qs. So immediately I'm excited because this is what you need if you're bullish. You want this Russell to get back above 180. That's what we're talking about. Obviously, continue to hold 178 on the downside. 178's a line in the sand for bulls, but get back above 180. Show relative strength. Continuation. The first 5-minute candle, you saw the relative strength. We've seen that before. We've seen it fail, but it's immediately a good sign. The second candle gives further continuation, gets us back above 180. I'm like, okay, this is really exciting. And everything that I want to be seeing leading the market right now is leading. I got banks going, I got KRE going. XLE gap down really big. They filled the gap on that XLE. Biotech was a little tricky. It was kind of not going when the IWM was going right away, but eventually started to catch up a little bit. But for the most part, saw everything going that I wanted to see going based on where the big picture technicals are in the market. We're getting bullish rotation coming in. We're back above 180, and that was it. Fine from that point. I said at one point this morning, probably when we built out this 5-minute shooter pattern up, this little bull flagging up, that the next real resistance in the IWM is 185. I honestly am looking at 185 from a continuation point. That's what I'm thinking. What I'm at, when the IWM was at like 181 and change. I didn't think we were going to get there today. That's a huge move, and we did. I mean, it's just a sick move. Look at this daily candle on the IWM. You got your breakout candle Friday of last week. Yesterday, you have a rest candle inside day that but holds above 178 and roughly holds 180, a little bit below it on a closing basis. And then today you get the inside and up, which is continuation after that breakout for the 1, 2, 3 play and adds on to bullish rotation, positive breath, everything that you want to see if you're bullish on the market. I mean, this is really solid as we get back into this 185 to 186 area really becomes our kind of next resistance zone. This is where the market broke down with SVB. So the high of like the breakdown day, if you want to call it that, for the SVB is 187.25. So there is some real resistance between like 185 and probably as high as that 187.25 that we're running into. It's been now a really big move into it. At the end of the day today, the IWM is $5.50 extended from the ADMA on the daily chart. It's almost at that like $10 equivalent of extension that we look at all the time for the spies and the Qs. It's not there yet, but if we get like a solid gap up tomorrow, or we get a small gap up and then some opening upside price action, if I'm seeing the IWM getting to like 186 early-ish tomorrow, then I will probably actually look for a short-term short in this thing just off the extension, which would be the exact same thing that I did with the Q short that I still have on. But IWM just completely beautiful today. It's exactly what you want to see. And SPY's never got above yesterday's high. It's fine. Look where we're trading, right? We're at 428 and change. ADMA is at 425 and change. As of the close, the ADMA will be a little bit higher tomorrow morning. We're $5 extended from the SPYs. So further rest today in the SPYs is great. Up small is great. And same thing with the Qs. Qs are flat to down on the day, but they've been in outer space. Yesterday was a shooting star daily candle in extended territory for the Qs. It tells you that these things need time. So I've been short the T triple Q for 3 days now. It's been treating me really well from a trading perspective. And I'm just kind of sticking with that short trade until I get my, a little more ADMA catch up on the daily chart. And then I'll probably be out of it. It's been a really good intraday trading vehicle for me. And, personally, there's nothing more exciting when your longs pretty much all make you money and your market makes you money at the same time. That usually doesn't happen. But yet that's what happened for me today. Pretty much every long I'm in paid me, and yet my T triple Q short is still my fifth best name on the day, and was able to give me some good cash flow. I mean, it's just really perfect. We've kind of called this market perfect. There's a lot of naysayers out there on this bull market move, and we've discussed that, and we've discussed in detail why those concerns are valid also, and there's something that we should be keeping in the back of our head. The fundamentals of this market are certainly precarious, but the technicals of this market, whatever reason you want to point to, whether it's positioning, which we've paid attention to, sentiment, which we've paid attention to, just technicals themselves that we obviously pay attention to, have been extremely bullish thus far, and have pushed this market much further than most people would expect. Yet us as a team, we've really been able to be on the right side of it. And this morning's call, I think, was also perfect. I called for being hands off today based on the spies and the Qs specifically. And if you were hands off on your big cap tech, it was the right move. And if you were able to focus on the rotation names, which we've also been discussing, this XLF now that got back above 3250. I know it's been sloppy, but Bank of America giving continuation, getting above 29. KRE that I've been in, I've cleared out of this KRE as it got back above 42. 42 is a huge level in this thing. then you were still able to focus on the right things, take advantage of that rotation, yet, not have to deal, yet still get correct, I should say, with the spies and cues telling you that it needs a break. Because if you look at this 5 minute chart here for the spies, and this is what you're focused on trading, there's no advantage here. There's no advantage to be had. This is a very hard chart for trading this chart specifically to be able to make money. We're creating this QQQ chart intraday specifically to be able to make money. That's difficult trading. Yet certain individual names today were able to give really good continuation. I'm happy with myself. I'm following my game plan perfectly, meaning that on the way up here, especially as this market is getting a little bit parabolic, these cues are getting a little bit parabolic. I'm piecing out of my longs slowly and steadily on the way up. Liquidated several of them today. I mean, my position disclosure, I've got 14 swings on tonight. I think that's less than I've had in a while. I've been in that like 17 to 25 swing positions for quite a while. But I'm down to 14 swing positions. Got out of that Google, got out of Apple, though I got back into Apple very, very small. I'm keeping some of that overnight. The market's doing exactly what I need it to do. I still have long exposure if this squeeze is going to be able to continue. But I'm not rushing in. I'm not mad or upset. What I really wanted from Apple to be able to get heavier was like 176.50. I didn't get it. I had a little bit of stock. I made a couple dollars in Apple today. It's fine. I didn't get the real pricing that I wanted. What I really want in Microsoft is 325. Weekday for Microsoft, but nowhere near that price. So, again, just from a game planning perspective, I'm prepared to take a look at these more technical pullbacks if and when they happen into these important spots. Yet I'm still keeping some long exposure on for continuation. Yet at the same time, when we start getting $10 plus extension in the queues, that consistent signal that we've seen for 2 years now of starting to build into shorts at $10 plus of extension from the ADA is once again paying me also. So, I mean, I don't know. This market's just been great for me. I hope it's been good for you, even if we were a little bit more hands off today from a big picture game planning perspective. That's a lot of times when you continue to get paid on work that you've done on previous days. And that's certainly how it was for me today. I didn't do a whole lot of new stuff today. I traded some Coinbase and I finished break even in Coinbase. Everything else I did today was just management of open positions, trading around open positions, and more or less continuing to get paid for doing a good job on previous days before the market got to the point that it's at now. So yeah, really good stuff. I hope you guys are as well. From an intraday perspective today, there wasn't anything that I was in love with, to be honest. If you got involved in the IWM or some of these banks, if you recognize that relative strength early on, I think that's where the money was. And otherwise, I still stand by kind of the morning game plan of approaching today's session with a little bit of a less is more approach. That's what I got. So I am happy to take a look at any questions that you guys have about anything. So give them to me. Got nowhere to be. Anybody? Anybody out there? I mean, I'm happy to do an early one also. I got emails to catch up on, but prefer to help the team if you guys need it. Okay, so I'm seeing a couple shot questions coming in. Cameron beat Kyle on the enter button. So from Cameron, can you talk about how you determine a breakout versus a pop into resistance? Specifically with shop, I saw 62. I saw 62. Oh, this was a great trade early on that Sharir called out off this pivot low. I love that trade too. So you saw 62 as resistance. Okay, I see what you see. As a daily resistance short instead of a breakout. Well, it's the same thing. It's the same. Let me read the rest of your question. But I saw that a lot of members in here took it long. Can you help me understand the thought process? Sure. So, when you look at resistance, if you identify resistance on a daily chart, you're looking at two potential opportunities. You're always looking at a short off resistance or rolling through it, right? And that's just kind of technical analysis 101, right? Resistance is an area historically where at that price there have been more sellers than buyers. But should that should there be enough demand that over time it's able to clear off that overhead supply, it's able to clear off those sellers, then that break can create a significant squeeze higher because anyone that was short of resistance is getting squeezed out of their position, and new momentum longs are looking to enter. And at the same time, that underlying demand that was able to get it up to that resistance consistently enough times to satisfy that upside supply, that underlying demand is still there, but the supply is gone. And there also tends to be less sellers, less supply above a resistance level than below it. Because if you were thinking about selling some stock in Shopify and you were thinking about selling, let's just say 61.95 or 62.05, and 62 is resistance, then almost everyone here is going to sell 61.95. Some people might make the argument of, well, I would get paid 10 cents less. Yeah, you get paid 10 cents less, but you'll get the fill, right? And that's really what you're looking for. So every time you find resistance or you find support, we always want to focus on our daily charts, but you should recognize that it's always a potential two-way play. Which side of the market do you want to be on? Do you want to short off resistance? Do you want to buy through the level? Or you could do both. You could short off resistance and then flip through the level. Which one you want to do really depends on your other factors. So looking at Shopify here, absolutely 62 is resistance, and it's a valid trade to attempt to throw 62. And I think if you did it the second the market opened, you actually caught a really good pullback of over $1 off of that. Personally, I would actually rather be long this stock than short it. Why? Well, one, the market, right? Let's look at our layers of probability. Is the market strong or weak right now? The market is strong. The NASDAQ, the Russell, the SPYs, they've all broken out. They're all in bullish territory. They're all pretty much trending higher at this point. So the market's telling you right now, for the moment, unless you're looking at extreme extension right now is the only time I'm coming in and sorting anything, really, unless it's in play. Like Coinbase was in play today. There was a news event. Um, but otherwise, this market's very bullish. I don't want to short resistance. I'm only interested in shorting extreme extension. That's what I did with the Qs. That's what we've done with, I don't know. There's been a bunch of those trades recently, like First Solar that day when it was getting super extended to the upside, or Tesla yesterday morning. I wanted to be able to short some, but I never quite got to the price I wanted. But that's an example of shorting extreme extension. Right now, if I'm looking at just a resistance level and it's not extremely extended into it, I would rather be buying it through the level than shorting it. One, because the market's on my side. Two, if you're looking at Shopify, is this daily chart bullish or bearish? It's super bullish. Phenomenal earnings report early in May. Spent a month digesting it, created resistance at 62, breaking higher. On top of that, I think it had news this morning. I don't remember what that news was, but it had news this morning. So I don't like anchor trend or range-based trades, which is what sort of resistance would be in a news name as a general rule. Doesn't mean I don't ever do it. I do do it. Um, but generally I prefer to trade with the market in news-based scenarios. Is there volume that's confirming that a real breakout could come in? If you're looking for a range-based trade or a counter trend trade, you want non-confirming volume of the breakout, meaning you want lower than typical volume, right? Like, I know some people are trading Roblox today. My concern with Roblox, and it kind of worked out. So hopefully everybody that was long the name made some money. I know Pat was in it and he agreed with me at one point when someone was asking me about, I think, buying this pullback at 1025, and I said I didn't like it. Obviously, if the market continues to go up and holds in, then your trade's probably going to be fine. But um, the stock here wasn't trading with the good, consistently high relative volume compared to what it typically does to make me think that this could go. If you look at Shopify's volume for this first half hour versus the volume first half hour yesterday. It's just an example. Yesterday's probably a little bit more of a typical day for Shopify, and today the volume was elevated all day. So again, looking at the resistance level that you identify on the daily chart, would you rather go short versus the level or long through the level, or you can potentially do both? Well, look for your other layers of probability. And what I'm looking at is a stock that is relatively strong in a market that's trending higher, that has a beautiful looking daily chart that has a news event and is trading on relatively higher volume. It's like everything is there, everything that you're looking for actual continuation trade on this. And career, the trade that he called out, and this might be answered for the Kyle's question, which I'll take a look at in a second, is this continuation hammer off of the pullback into the ADMA. I love that trade. Obviously, you're below your 62 at that point, but this is what I'm always looking for, especially with names that are in play, right? I always want to see what does that first test of the ADMA on the 5 minute look like? Is it a price correction pivot low? Is it a bull flag where the ADMA catches up? Um, that's what I'm looking for a trade. So I love this trade. Gaps up into 62, which is resistance. They sell it off that, but the name's in play, the volume's good. It gives you a hammer, continuation hammer on the second 5 minute candle of the day. ADMA is caught up to lows now, so you can feel very confident with this stop loss. Very confident with the stop loss, which you don't always get that in the beginning of the day on news names on the second 5 minute bar of the day. A lot of times you're taking a momentum trade and you're forced to put your stop loss in a spot where you could easily get shaken out of the trade and have it still work, which for me is very frustrating. But this is a stop loss that you can be very confident in that if it triggers your idea itself is wrong, this thing should never be able to get back below this low. And then the only other thing you got to assess is whether or not the risk is worth it to you. Um, what price are you able to get on this? Because you got to get it to lows. So 60.72 has to be the stop loss. The candle closes, the second 5 minute candle closes at 61.60-ish. So you basically got to take 85, 90 cents worth of risk. I'm probably not taking that, to be honest. I would want it a little bit tighter. If I could get a price, I'm gonna say no worse than like 61.30. I'm probably in. I like that risk reward better. Um, the technical setup here I think is great for the long. It's just a matter of if the risk reward makes sense to you based on the price that you're able to get. So I hope that helps with your question there, Cameron, and Kyle here also has a shop question. Let's see if I answered it or not. For sure, Cameron, layers of capability is key. It's key. We've discussed this in the past, right? Trading is not as easy as memorizing what chart patterns look like. Depending on the chart pattern that you're looking at, I saw a statistic somewhat recently that they have anywhere from a 30 to 50% failure rate. So if you take the worst end of that, 50%, you can see that typical chart patterns and how they relies on and answer, okay? That's really bad. So when you identify technical chart patterns that will be, more likely in the 50% of the time when it works, it's all the other layers of probability. I think if you go back to my training program classes, the probability class I think is in the top three most important classes. So definitely one worth reviewing. Kyle's question on shop was shop today. I was not involved, but I noticed after the 935 pivot had already occurred. What are your thoughts on taking the 950 inside five for a long? Yeah, I like that too. So you got this little bit of an edge there. The ADMA is catching up. Building out this pattern. That's exactly where you're looking for continuation. I always prefer to be in the trades earlier whenever possible. Um, I personally find that the earlier I'm in trades, the higher my probability of success. Like you might get in that inside five trade, and I'm not downing the trade. I think it looks good, but you might get in that inside five trade that shakes out or fails, and then you lose money in Shopify. Whereas then when this thing totally fails and that hammer low from the second 5 minute bar breaks, and I get stopped out too, I'm break even on it because I got that additional move. So definitely not downing it. I just would say broadly, I prefer as a rule to be able to be in the first setup when it's there. And I'm always very cautious that I might be chasing price if I'm getting into a later setup after missing the initial setup. But yeah, that inside five is great. It's also right in front of 62 resistance, a bullish looking 5 minute pattern here with an inside candle at the end of it. So it's a tightening pattern as the ADMA is catching up with good relative volume, with the name in play, with a good daily chart, with relative strength. So there's still a lot to like with that trade as well. Cool. SEC to try to freeze Binance US assets. Ouch. Varun, what are you saying here? Oh, Boeing, uh, 2 p.m. bar. What happened in Boeing today? I think this is when I was on the phone with the tech guy and I missed this entirely. I also don't like to trade Boeing. Is Tesla moving after hours? Tesla's up after hours for some reason. I have no idea what happened with Boeing at this time. It's clearly a news event, but I don't know what it was. And whatever that news event was, they bought it back up to that 21 EMA. It's a pretty decent buyback. But I don't really have anything else to say about it without knowing the news. Delivery order delay. Okay. So generally, if I'm trading a news event, I want to be long or short in this case versus the other side of the news event. So I would want to be short versus the high of this bar initially. If I get stock anywhere within this first bar, I want my stop loss to be the high of that bar. That's where I know that the market has decided that the news doesn't matter. So that's 211.24. It's 211 spot 24. Um, thanks, Pat. Uh, So whether or not I'm taking that depends on what type of price I can get. Um, I was annoyed at myself this morning. It sounded like a few of you guys were also that Coinbase news was so relevant. And when Pat got it into the VTF, I think he could have shorted it for $53 still. Like that's a great price. But I'm not chasing below 50 after I missed that, right? Because where I got to give it to, I got to give it to the high of the news bar, right? My appropriate initial stop loss, if I'm trading it at this time, really has to be 59 based on that. I probably, if I got the stock at, 53 and change, like I would have liked to have gotten, and when Pat called it out, I probably would have used a daily level stop loss, like 56 on it, and not given it all the way up to 59. But really, the right way to trade it is the other side of the news bar, and then you know your idea is wrong or not. And then at that point, it depends what type of price you get. Another example was Unity a couple days ago. Um, Pat was so early. I think it was Pat. Was so early on this news, and I was kicking myself. I I um I was so dumb at how I traded this. I think it was 33.50 was the price I almost got, not 32.50. It could have been 32.50. You got the news so early. I think it was 33.50. I saw it. I saw the news. I know Unity's got a big short flow. I know it's a squeeze name. I know that a partnership with Apple's huge. I see inside offer at like 33.50 something. I decided to be cheap. I put a bid in at 33.51. I didn't get stock, and then it exploded. But in that case, I would have gotten long versus the low. I would have given it down to 31.77. So what you're trying to do when it's these news events, and this is very hard, is you're trying to assess the importance of the news versus the price that you're able to get versus the risk of giving it to the news event low or high, depending on if it's a positive news event or negative news event. So on a positive news event like Unity, for me, no, I know the stock, I know the company, I'm pretty sure it's got a high short flow. I know it's a squeeze type of stock. I know that news is huge. So for me, if I could get stock at 31.50, sorry, at 33.50 versus 31.77, I'm in for my thought process. I'm in. And then I would have a game plan to build in a little bit lower if there was some volatility to the downside to be able to get more stock. And I just executed poorly and I didn't get anything. Um, so you're doing the same thing. You see Pat post that Boeing news at 2 o'clock. I don't know Boeing well enough to tell you how significant that headline is. Not in the same way that I know Unity. Um, I just don't know Boeing well enough of a company. I don't know if that's significant or not. So therefore, I'm automatically out. I'm not it. If you know Boeing well enough to know this is really bad news, well, what price are you able to get? Is the risk worth it to you? Are you able to hit 208 and give it to 211 and change? Or are you typing it up and it's at 204 and you got to give it to 211 and change? There's a big difference. And especially, but also depends on how you view that news. So that's how I trade news events. You got to be very careful because the algorithms are so fast that unless the news is very significant, a lot of the times, as great of a job as we do getting news into the virtual trading floor here, thanks to Pat and to Bill, primarily, um, the robots are still so much faster that by the time you see it, unless it's a major news event, a lot of times you're almost better off looking the other direction for the snapback, right? Like if you didn't type Boeing up until it was approaching $200, and $200 is daily support, and you don't, and you're like, oh, that news doesn't even matter for this stock. You could have came in on the other side and gone long versus 200 and put a $7 snapback. That might have even been the better trade depending on how well you understand this company, how well you know the technicals, and what prices you're able to get. So, most of the time, a lot of the time, we're not going to be fast enough to actually really capture that move unless it's a very significant thing like a Unity. Most of the time, you're literally looking almost at the top by the time you're able to type it up, or in this case, bottom. So, I hope that helps, Mr. Varun. Um, Well, next I'm seeing is from Zahor on Meta, I think. Meta went up on an elevator this morning and then came down via the escalator. Yeah, Meta was at some world this morning. So I don't want to be involved in that right now at these prices, at this level of extension. That's one of the things that I said in the meeting this morning. And I said that for almost every big tech stock with the exception of maybe Google, Microsoft, Amazon, Meta, uh, Nvidia. All of them are kind of in zones where I don't really want to be buying. I want bigger price corrections. It doesn't mean they can't go up. Meta, it looks like was moving off of a news event today, basically. And that news event is a digestion of people's assessment of Apple's headset that they're creating, the Vision Pro or whatever, versus Meta's headset that they already have out there. And if it does damage to Meta's business or not, or what. I am not an expert in this space. I do not have a strong opinion on it at all. But what people have told me generally is people that use Meta think it's clunky and heavy and difficult, and some people seem to be super psyched about Apple. I would think that would be a negative for Meta, but market participants decided to buy it up this morning. It was like one of the stronger, bigger tech stocks out there this morning. And that buying died and it rolled all the way down, and the Qs were relatively weak today. So, um, yeah, big opening upside move for Meta, and then it rolled all the way back down. I mean, the rollover in the afternoon could just be attributed to the daily extension with where the Q's are. So again, that's just why I don't want to be involved. And it even goes back to like I didn't get to do an afternoon meeting yesterday, but like I just feel bad sometimes, and obviously my job is difficult. Trading is difficult, and trying to guide everybody correctly it is difficult. But like, I remember yesterday morning, people were asking about SoFi for the inside nut, and I kind of poo-pooed it a little bit in the morning meeting yesterday because of the degree of daily extension. That's not to say that it can't go up. It just means that that trade is difficult for me. So then, like in the beginning of the day yesterday, when SoFi was just absolutely ripping, I was like, "Oh, great!" Like people wanted to buy SoFi through yesterday's high. I don't know how many people I just talked out of this trade. You could have bought this thing at $7 and 12 cents versus 7.07. You could have bought this thing for 5 cents worth of risk yesterday and caught an opening move of 60 cents basically, or 50 cents basically. And it could have continued, it didn't. And I remember looking at this thing at highs, and I'm in SoFi, right? So I'm happy, I'm making money, my position's going up, I'm selling on the way out. I certainly wasn't, I didn't take that buy though. I'm just selling my swing position, bringing it into this upside move. And I go, man, like I talked these people out of buying SoFi today, and it's given this sick move. And then it rolled all the way back down. And I know that it's still close positive. So if anybody did take that trade, they would have made money in it, and it works for a momentum trade. But you get these failures back down when you're dealing with that extension. It's very common. You get that upside tail. And off of yesterday's candle with that upside tail, there's a pretty high probability that you get moved back down to this 80 EMA. Yesterday's trade to the long side is very hard. And I know that today it did a lower probability situation where, which way is coin moving? I'm glad I got out at the close. Um, I know that today it did a lower probability situation of actually getting above yesterday's tail high today in extended territory. Really shows you that in a lot of ways the animal spirits are alive and well in this market right now. But all I can go off of it is risk reward and probability of success on how I see it. So I might kind of poo-poo a SoFi long yesterday, like I did in the morning meeting, and have it work. It doesn't necessarily mean that it's a great trade because when you get that extension, you get those afternoon rollovers. It's much more common. It's very difficult to have sustained extension like that just goes and goes and goes and lasts and lasts and lasts. It can happen, especially when there's a news event that's occurring. But if you're looking at Meta today or you're looking at SoFi yesterday and you didn't buy Meta this morning off the open, you didn't buy SoFi yesterday off the open, even though SoFi ended up working decently, I, I kind of think it's the right move in the long run, even if it worked yesterday slash work today. So that's that. Uh, Why did coin rally today on the SEC investigation news? I was thinking it may go down further. Instead, it rallied from the opening. I mean, coin still finished down like 10+% on it. I am not an expert on cryptocurrency or cryptocurrency brokers. So I don't know. The direct answer is I don't know. Maybe people are viewing coin as the safer company, and people who are taking their money out of Binance have to put it somewhere. So coin ends up being the benefactor of that, even with the SEC investigation. Yeah, exactly. It might be the last game in town. Uh, the company's CEO came out and defended the company today, and basically was like, "Well, hey, SEC, if you thought our business was illegal, why did you approve us to go public to begin with?" So, um, right, and may lead to nothing. Might be a witch hunt, whatever. Again, I'm not an expert in the space. I can tell you as a general rule, SEC investigations, accounting scandals, things like that are always bearish for stocks pretty much. And coin did close down over 10% today. So it wasn't like it didn't get hit on it. The CEO did sound confident. He certainly came in and defended the company. So I missed the initial short, and then I did short it. I traded this thing short all day today, and I got out to the close break even. I didn't have a profit cushion on it, but I traded this thing short all day. I wanted to see how it traded into the 80 EMA and into the 21 EMA. I traded a bunch of it. I traded it back and forth a little bit, and again, at the end of the day, all my trades combined, I finished break even in it, and I just closed out. Um, but yeah, I mean, my bear case on Coinbase has been less on regulatory stuff and more just broad. And I was actually wondering that, Nick. I see your comment. I wouldn't be surprised at all if we see tomorrow that Kathy came in and bought a bunch of Coinbase into this downtick today. But whatever, that could have been the 50 buyer, right? That big 50 buyer when I was short kept coming down to 50 and couldn't come up. Maybe we'll find out tomorrow that was Kathy herself on the bid. But my bear case on Coinbase has always actually not been from a regulatory perspective, has not been a bear case that I necessarily even apply on Bitcoin. It's just been the fees. I have a Coinbase account. I don't really use it. I don't really have much crypto. I have like a very, very, very tiny bit of Ethereum at this point. There was a time in the past I had a little bit more. I sold all of it into that last bubble. That me, and I don't want to get on and off tangent here. I still have not had anyone, and maybe I'm just like getting too old to keep up with the cool kids, but I still have not had anyone that's been able to make a convincing case to me on any of these cryptocurrencies specifically. Blockchain, I get it. Some of the technology behind it, I get it. Bitcoin, I don't get it. And again, that's why I have a little bit of the Ethereum and not Bitcoin because I understand kind of that there's a use case there a little bit more. But anyway, I don't want to get off topic. My bear case in Coinbase is not related to a bear case on crypto. It's just the cost. The cost of the transaction costs on Coinbase seem ridiculous. And my thought process was, and maybe we're saying the opposite. as more brokers come out and more competition comes out, then similar to what we saw in the equity space, you eventually get a race to the bottom. And next thing you know, all these companies are doing free buying and selling of cryptocurrency, but they're selling your order flow out to crypto HFT firms or something like that. It just seems like a natural evolution. I don't see why crypto brokerage wouldn't end up going into the exact same direction as equity brokerage. And while there is a lot of money in the sell your order flow business, compared to the commissions that, and it's been a while since I bought or sold any cryptocurrency, but compared to the commissions that Coinbase charges, the commissions seem like absurd to me. How much you have to pay to buy and sell. So that's been my bear case on it. I've been bearish since the IPO. I just wish I held that stock. I had stock short on the IPO day from like $410. Crazy, crazy where they opened that thing. I got out of that at like 350 or something and made like $60 and thought I was a genius. Shame on me. Yeah. Um, from Nick, piggybacking on Zahor, if we continue up and the squeeze names go, coin could really go. Yeah, for sure. It's got a large short float. I think it was Brandt pointed out, be careful on the coin short because it's 21% short float, something like that. And a lot of those names have been performing in this environment. I mean, you could get a short squeeze broadly in short squeeze related names, and Coinbase is weak and it's just like ripping because people who are having to cover their Palantir short are also short Coinbase and need to raise cash and are covering both at the same time. That's just how market dynamics work. Um, so we'll pay attention to it. 50 is an important level, I think, going forward. 50 on the downside, 56 on the upside. If the stock recaptures 56, and then we'll carry what the SEC is doing. GBTC rallied. I hate GBTC. Yeah, BITO is up a lot today. Like grayscale Bitcoin trust is garbage. I would not. I wouldn't touch that with your money. But I'm biased. I know the CEO and I dislike him very much. One of the few people in the finance world that I don't like. Anything else, guys? Any other questions? Is there anything on YouTube? Yeah, we got some questions on YouTube. This OBS, this new thing I'm using here for streaming, it actually shows me the questions on YouTube as they come in, which is awesome. So I'm seeing here from Chi, what is the lag on Fed rate hikes on the market in your opinion? Like when they hike, how much longer does it take effect? I think studies have shown it's usually about 6 months. So when they do a hike, you see about 6 months later its effect on the market. Follow-up question. Question on game planning. When I want to go long from a common gap down to support, would this be a continuation trade? It's a continuation trade only if the stock itself is in an uptrend. Um, and I don't think so. The trades can be a support trade. So like, let's just use Apple as an example. If Apple gapped down to the level I was looking at, 176.50. That would be a continuation from the debit chart. It's a continuation of the uptrend, but it's a common gap down in support. So your trade is support, and it's definitely a continuation trade. But it doesn't always have to be that way. If you were looking at a downtrending stock that was having a common gap down in support, and you went long, that would be a counter trade, not a continuation trade. So it really depends on what the time frames look like on the execution of that trade. What if intraday there is some sell-off into support and a bounce from that level? It's so whenever you're thinking about a continuation trade or a reversal trade, you gotta recognize multiple time frames. You could be taking a trade like what you just described. That's a counter trend trade on a 5 minute chart. It's a whip trend continuation trade on a daily chart. And that's usually how that works. Right? That's how generally how pivot lows are formed. Like I don't know, look at the pivot line. Well, I still have Apple up. This is a great example that you could use any of these pivot lows on the daily chart from March 28th. See this downside tail on the candle? That inherently means that intraday at one point this thing was down trading on a 5 minute chart and had an intraday reversal and came back up. So if it was coming into some support, which it was, 155 is support, is that a counter trade or is that a reversal trade? Well, it's a reversal trade on the 5 minute, and it's a continuation trade on the daily chart. So it depends on your time frames. You do not have time frame continuity on that trade. It's fine. Um, when you are looking at differences in trend on different time frames, meaning your daily chart is trending higher, but your 5 minute chart is trending down, that has to be rectified eventually. Either that 5 minute downtrend just keeps going and going and going and going until eventually this daily chart starts rolling over and the daily chart begins to break down and your 5 minute downtrend becomes the start of a daily chart downtrend. That can happen. Or the much higher probability situation is the opposite. As a general rule, when you're looking at competing trends, again, like a downtrend on a 5 minute and an uptrend on a daily chart, the larger time frame is what usually wins. So if you're looking at that downtrend on the 5 minute chart, is it more likely that the downtrend on the 5 minute chart pulls down the whole daily chart and the daily chart eventually rolls down? Or is it more likely that the 5 minute chart reverses and the daily chart trend continues? It's much more likely the latter, that the daily chart trend continues. So that's how you kind of rectify and justify your trend analysis on multiple time frames. Final question from Chi. How to classify this trade setup strategy? Would I name the trade from intraday execution setup or daily setup? Any pointers there? Uh, it's tough. For me, it kind of depends on the situation. Depends a little bit on the situation, on what I'm looking at. Um, I probably tend to go with more of the daily chart. So in that case, I'd be talking about like maybe you executed because there was a yeah, it's hard to say. Maybe you're actually taking this execution. You know that 155 is daily chart support, but on the small time frame above 155, you see a 5 minute hammer capitulation candle come in. You're 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 going long. In that case, your trade would be the capitulation on the 5 minute, with the daily chart being a layer of probability. So in that situation, I actually would call the 5 minute setup the actual trade. But in another situation, like what you said before, the gap down into support, daily support, I'm gonna probably call that a support trade off the daily chart. So I think it depends a little bit on the situation. From Tate, thoughts on SoFi going into 8? Yeah, so 8 has a big resistance from the last time this thing had a nice move back here on a good earnings report in February. Um, yeah, I mean, look, you got big resistance in this 8 to 850 zone. So we'll see if we're able to get up there. You're very extended right now. So could it get to 8 this week? It absolutely could get to 8, especially if the market still stays supportive. Would I come in and buy 670, 770 right now for a move to 8? Absolutely not. So I think if you've already got a position on that, you should just continue to manage it. And if you don't already have a position on, then you probably should not enter it. And at a certain point, if you get much more extension here, like let's say tomorrow they have another rip, face ripping rally in SoFi that gets it to 8 quarter. I'll still be wrong, to be honest. I'm big picture on this. I'm looking for a move to 13. That's my target. Um, but if I wasn't, I probably would look for a smaller time frame extension short into like 8 quarter area tomorrow if it ever got up there. The extension would just be absurd on the daily chart at that point, coming into really big resistance. From EMI QHD, divergence in the VIX and VVIX led to market SPY correction back to the 21 EMA. So there's no divergence right now that I'm aware of, unless the VVIX were out in the afternoon and I didn't see that. Um, I don't actually have access to it. Sure, if you can show me the VVIX. I'm not sure if anybody in the VTF, if you're there, I'm not sure if you could let me know if VVIX rallied into the close, because if it did, I didn't see that information. But otherwise, you're not looking at a divergence. The concern I saw that Pat mentioned when he was on the radio, and maybe you can also confirm if he's listening, is how many days in a row that down the VVIX is. that at a certain point, it sounds like you're almost looking for an extension bounce in the VIX and the VVIX. They need to reverse split the two VIX as long as this goes back to $2.30. It's such a garbage product. But the closed flows, but nothing to anyone. Thanks, Pat. So yes, and then moving still in the VIX or VVIX yet. But we're probably due for a bounce in the VIX at a certain point. It's just getting a little silly on the extension. It seems to me, just looking at you, VIXy, real quick, that the VIX is almost more extended to the downside than the market is extended to the upside. And that may actually be a little bit of a divergence that lets you know maybe this VIX gives a bounce a little bit and this market needs to take a deeper pause. I mean, a deeper pause for the market, as much as I've been bullish, a deeper pause here for these cues would make a lot of sense. This rally has been insane. We're at 355. 80 EMAs at 350, 21 EMAs at 340. The spread between the 8 and 21 EMA is getting really wide. VVIX down, VIX down, whatever, 6 days in a row. I think we're getting to the point where we could actually use a much larger consolidation than what we've seen thus far, and a much larger consolidation than like what we had here in May, where we got like a 4-day price time correction pivot continuation. I think that we're due for something longer than that. It's just right now, I don't know what it is. Performance chasing, short squeezing, positioning. It probably has a lot to do with it. The degree of the move in the cues is getting a little bit silly. But that's why I think back to like if you're look at if you're trying to make a whole argument for this market, what the IWM did today with the cues being flat to down and the IWM going 2 3/4%. I mean, it's like it's stellar. Because we've got this location where all this stuff that's so extended, these cues that I'm explaining, the move has been so big, they really need a broader consolidation. And I look, they can get touch the ADMA and continue to 365. Or maybe if I beat the ADMA, but probably I can go to 365 for the cues. It absolutely can happen. And I think that we're just going to look at a move here where more broadly we need a deeper correction than just an ADMA touch. A longer sideways, price correction, time correction, where, as long as we hold the big picture, I would say 340 in the Qs on price pullback, that we remain okay. Let that 21 really catch up. Take a couple of months here, honestly, of tougher sideways price action, or a month or something like that, and then reset up for continuation on the next squeeze when the economy's looking better or whatever. Um, I think that's what we're looking at. But if the Qs can do that and the IWM continues to work its way back up into the low 190s, mid 190s, I mean that's a very possible bullish situation that could happen. Just continued rotation. But we'll see. I mean, today's move was outsized from the IWM and really enabled this IWM to play some catch up. I mean, if you compare the Russell to the Qs over the course of the last few months or for this year so far, I mean, it's very hard to make the comparison. Look at the March low in the Qs to where they are now. Look at the March low in IWM to where it is now. I mean, it's up and it broke out over the course of the last 3 days, but it's like nothing compared to the Q. What does the QE look like? Also breaking out and improving, but weaker than the market cap, the mega market cap stuff. All right, cool. It looks like I got through all the questions on YouTube. Looks like I got through all the questions on the VTF. So I appreciate everybody's participation. Like I always say, it's you guys that make the community great. We'll only be able to improve as a team as much as you guys are able to ask questions and provide information. So keep it up. Have a great night, everybody, and I will see you all tomorrow.